Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Alright, let's update our view on the gold market. So we were talking a lot about the bearish position, bullish position here on the weekend, if you remember, and mostly have come to conclusion that only bulls right now could try to take the position because at least they have the pattern on the weekly chart, which is bullish grabber. For the bears, although we have the trend direction to the downside, but since we have directional pattern on the weekly, it is not good background for taking a short position. And we said in weekend that you should wait. If you would like to sell, it would be better to wait when the situation with the grabber will be resolved. Either market will complete its minimum target or it just will fail if market drops below these lows. Currently, you can see that although the overall performance with this grabber was looking not a bit tricky, we don't have any thrusting action, very choppy performance, but still you can see market still holds it and performance is starting to the upside. In this action that we see, I do not see lots of political component. Maybe some geopolitical background exists here, but mostly this performance stands due to the drop of the yields. So if you take a look at the 10-year yields, you could see that it started downward action recently, and mostly this supports the dollar rivals. We could see same performance on the euro currency, on the gold, that I suppose that this is major background for now. We will see what will happen later in this week, but for now it seems that the interest rates are more interesting. So recent performance you consider just confirming our thoughts. Besides daily trend, as you can see, the verge of the turning bullish in the direction of the grabber. So we can see that bears currently do not have even theoretical reasons to take the short position. So that's actually the clarity that we've got. Let's take a look what's going on in lower time frames. Here's everything stands even more interesting is because we're here start dealing with the precise swings of the bearish context and how market would try to maybe break it or something. You could see that market returning right back up to the vital area for the bears. We already have discussed this many times. 2040 will be vital area. In the case of the upward breakout, it means that the construction hold this downside action will be broken and market should start moving above the 2088 area. But in fact, if you take a look at the weekly chart, you will see that minimum target of the grabber is 2094. So it's top on the monthly chart of the previous month. So that's approximately the target. Let's call it as 2090, 2021 even. So that's where the market theoretically could go in the case if grabber will work. On the lower time frame on the hourly chart, here's what's happening. As you could see, our suggestion of the long entry was correct based on the grabber. Or it was not difficult just because this was the actually last fib support where theoretically it was possible to take the position because this is already invalidation point with the grabber. And market gradually slowly is moving higher. That is the lows of the week. The market has opened the week and started upward action. And you can see these lows are still holding, market is moving higher. Here is trying to break tactical resistance. So you can see here is not just the crossing of the lines, but at the same time, this is the same confluence area that is already have tested. One of the scenarios that might be formed here, if for example, you would like to buy, but you have not taken position here, let's take a look. Would not exclude that this might be kind of the reverse head and shoulders on top. So for instance, you can see that it might be pull back here, somewhere back to 2020, 2025 area, and then another attempt to break all the story to the upside. Nearest target of this ABCD pattern stands the OP 2046, XOP 2070. But if it will go above the OP, already will mean that it's hardly will stop right the XOP, because the major target sets higher, as we have just discussed. So from that standpoint, once again, you could make the corresponding decision. You could try to take the position here with a small lot. If we will be correct on this head and shoulders, you could add more around 20-25 area. That's one of the scenarios. Very similar to what we discussed on the euro today, but just in opposite direction. You could do nothing, just wait for the pullback to get the whole lot around this area. That's more conservative. It carries less risk, because in this case you will be able to place stop tighter, closer. But at the same time, you could miss the entry if market will start upward action immediately. If you just break it up and keep going. What the way to choose, that's up to you. So how you manage your money, how you manage your risk, what's your risk aversion, and so on. So it's very personal. But in general, the situation stands like this. So as a bottom line, we would not consider any new shorts by far, based on the recent performance that we have, and consider a few scenarios for possible upward continuation in the gold market.